Good day. Ira Epstein with your financial market wrap-up for this Wednesday, the 30th of October, 2019, day before Thanksgiving, and what an interesting day. FOMC meeting today, the market reacting to it positively. You don't need my take on it. Just take a look at the market. You have some new all-time highs. Metal markets up on the same news. Dollar down. In the British pound, the market getting something of a bid off of the idea of that December 12th election and a very heated race going to happen to see who can control Parliament, how many seats everybody gets. If you look at the EIA numbers that I wrote about in my morning subscriber update, you'll see that it was a big surprise to what the API showed, and the market responded in a negative way, and it should have. You're not getting the draws that you were hoping for. Now, the events of the day, the Fed basically saying 3 and done for the near term unless some conditions warrant it. There's some of the wording that they changed. We'll have to figure out what that all means because they always speak in their own vernacular. But as Mr. Powell in his own words said, you know, the wording's one thing, but that's why the press conferences, and he's telling you that they want to see inflation pick up, but the market's in a good place, 3 cuts. They want to see what the market does. Now, there's an interesting study by a firm that was recently done. I think it's Kenosha, I forgot the name. But over a 25-year period that they looked at, when the Fed did 3 rate cuts and stopped, the following year was a very good year for the market. History is that. It's history. It's not a predicator of what has to happen going forward. It's an indicator. I think the best things that could happen for our market, of course, is get these trade deals done. And talking about that, there will not be a signing of any phase 1 deal in Chile, not because the two sides can't get together, because of the unrest in Chile, and the government there is in a state of, right now, massive flux. That's the right word to say. So where will it take place? Don't know. Will it take place? Don't know. Will China be buying $20, $50 billion worth of agriculture? Don't know. But that's what phase 1 is about, and that's a little bothersome to me. At the same time, you got to read all I write. There's a lot going on with the Fed looking at 20 and 50-year bonds because we're going to start crossing a $1 trillion deficit, and according to Mr. Mnuchin, it's going to stay that way for quite a while. Just want to bring that all up. Whoa. All right, we're about charting here, not about the rest. That just highlights. Weekly area chart of closes, bullish. All-time high closing area right now. The week's not over. You could easily give it up, but that's where you're at this point. When you look at the chart action today, a huge outside day to the upside until today's low is taken out, which could, if it's taken out on Thursday or Friday, I'll view that as a big negative. Not bearish, a big negative that this is extended too far. In looking at the overall trend, you can't get away from higher lows, higher highs. That's called bullish. The 18-day moving average of closes, as I told you yesterday, was going to get over this last break low, and it's going to jump again. It could jump another into the 290s easily tomorrow. So support on pullbacks, wherever that number comes in, that's what I'll be looking at. What about resistance? Well, the upper Bollinger Band still hasn't been hit. It races away from the market every time it gets close to it. That is not the best signal. I like when it hits it and backs away. But if it continues up, I think it'll be higher tonight when the markets reopen than 30.68. That's the math generally goes towards that, and I know how the math is done in that. So I'm looking for a bit higher than that. And momentum, this is to me the key. You've got an embedded reading, and you know what I say, when you have embedded readings, the pros are buying on pullbacks, and they're looking to see if they can get a market to a resistance zone, which in this case could be that upper Bollinger Band. You hit that band 2 days ago in the NASDAQ, backed away. Today you're still not back up to it. You can see how the market's up. Apple's earnings after the market, powerful. Really good, 303 a share, and they're seeing good growth in all their service sectors, so the markets are acting. I think the analysts will like what they're seeing. I'm not a stock person, but we'll see what they do. Higher lows, higher highs. I'm looking for resistance wherever that number comes in, that upper Bollinger Band. In the Dow, same thing, and now the Dow's joining the parade. Can it get an embedded reading? Well, both numbers today are over 80. Yesterday, both numbers were over 80, and the day before. So the answer is it did it. So until the red line closes back under 80, I'm still bullish, looking for pros to be buyers. You had an outside day up. I'd be concerned if today's low was taken out. Barring that, I'm still looking for the potential of the upper Bollinger Band resistance. The Russell embedded reading, it's the laggard in the market. Okay. Will it catch up? Don't know. It's the one nowhere near all-time highs. It's in a key resistance area as I turn around here for you to see. So it's not new. We know that that's the case here. This is the small caps, not the same game as the big boys, as I like to call it, but bullish. VIX. Do we get to the lower Bollinger Band? I'm going to say it again. I think if the market hits wherever that number comes in tomorrow, the pros will write puts looking for the market to get back up to the 18-day average. Now, something happened today that I think is important. We had a bearish crossover right here, and this was the break low at that time in the market, and then it rallied back a bit. Now what the market's done is it's gone under this to 1227, taking out that low. So the crossover resulted in a new low for the move, and now we're going back into where this market was last year. And see what it can do as it approaches a whole year of sideways action that was low down there. We'll see just what goes on. In the T-bond market, a rally today, and you lost an embedded reading. Losing an embedded reading often, not always, often, is a sign that price and the nearest moving average wants to come together. Now, originally, let me come out of today, that would have been the 100-day average. You closed over it. Does that mean it hit it? It's difficult for me to answer that. I don't know how to answer it. It could go to the 18, and that might have been all it had to do. But it's lost, and that means, to me, this leg of the downtrend came to an end for this time frame. When I come over to the 10-year, same thing. But as you can see, you hit that 100-day on the day that it did it. I'll take back from yesterday. That was the goal, to get to that number if it's lost. Maybe it gets up there. We'll have to wait and see. Trend's still down, but now you're in oversold conditions in these two. Then we come to TLT. It's the same darn play. Embedded reading, right through here. You lose it. The closest moving average is the goal. You've hit it. So you're still in downtrends, but you're in oversold conditions, and I don't know if there's legs left in that part. In the dollar index, if we take a look, yesterday was an outside day to the downside. If you take out the highs of an outside day, I'm looking for the market to go to the closest moving average or a Bollinger Band above it, the closest of. In this case, it's the 18-day average. You made your run at it, right back down. So I have a market that is oversold, void of a trend. I've got a higher high and a lower low into some support at the 100-day average. In the eurocurrency, we ended a down leg. What the market effectively did yesterday is that, and I think we talked about it. You had an outside day up. Unless that low's taken out, this leg to the downside, as far as I'm concerned as a chartist, has ended. The question is, what does it do next on the upside? Today it started answering that. Resistance all the way up here. Not overbought, or is it? It is overbought. Any reading over 70 is overbought. British pound. Higher lows, higher highs, embedded reading. Until it loses the embedded reading, I say the pros are still friendly. Take out 128.26, you might lose that. But even then, I'm only looking for support at 127.47. So this market bottomed in this area. Now it's drifting sideways, trying to figure out its next play. Japanese yen. Interesting day. You rallied enough today to take out yesterday's high. And in the process, with an outside day down, you have lower highs, lower lows. This market is still bearish. Could it get down to the lower Bollinger Band? It's certainly in the cards. I'd like to see when it opens tonight, does it keep the embedded reading and turn back down? It's arcing up, but the game plan is still one where the bears are in control. Bitcoin. When this market got up here, you know what I was saying. First move over Bollinger Bands. I questioned this whole play, that dramatic move that it had, and that was off the idea that China likes the idea of the blockchain. Now, they also like the idea of their own yuan cryptocurrency, not these others that are out there. And I think it took a while for the trade to understand that, and you've been backing off since that came out. That doesn't mean it's bearish. You know, you've got a market that's void of trend. You have a lower low, higher high. When I come to the Brent, and I moved to the January Brent versus January WTI because November goes off the board now. Well, battlegrounds, the 18-day moving average of closes here. As I come in by itself to the Brent, and this is the January contract now, higher lows, higher highs, battleground, 100-day average down to the 18. You lost the embedded reading. You see that right there? But similar to some of the other markets, you lost it on the day you hit the 100-day. Is that the goal or the 18? I don't know. WTI, market's just overbought, correcting, support back at the 18-day average. You can see the battleground was the 100-day average. I think you can see that fairly clear to the upper Bollinger Band. You gave way on that, and now you're giving up even further ground. And in the gasoline, outside day down at an upper Bollinger Band and losing the embedded reading. I think you're putting into play the possibility of getting to 158.50 to 155.69. It certainly looks like the end of that particular thrust. I'm wrong in that thinking if today's high is taken out. Even though it's against an upper Bollinger Band, I'd be wrong on the chart pattern. In the nat gas, look out your window. It's cold. It's freezing in Chicago, I can tell you that. So that first run has gotten everything up. The first time we see the weather forecast come out with a 10-day where it's going to be milder across the swamp from the Midwest to the East Coast, market will probably give something back. Right now, I wouldn't fight City Hall. Market's overbought, but very strong, finishing 268.60, well over the upper Bollinger Band in its first thrust. I'll talk about if that's too much in a day or so for you. Remember, my special index report today goes off my website. So if you haven't seen it, it's on the S&P. I like what I wrote, especially like it on a day like today. You'll see the price counts that I had on it, the seasonals, the 5, 15, and 30, what I'm excited about, and you make up your own mind. But it's all there, and how you get it is simple. You just go to our website at www.iraepstein.com under the word research. Make sense? You'll see a drop-down panel. It'll say the stock index. Click it. Away you go. It comes off at midnight tonight. They only stay up for 5 days. They're not about history. So if you want it, it's there. My staff can help you. If you have any problems with it, you can click here. If you're watching me on YouTube, it'll take you right there as well. I want to go see Facebook and Apple earnings and the aftermarkets. You have a good day. I'll be looking at them. Take